Be Wealthy and Smart, episode 1050.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the S&P 500 is officially in a bear market. So what does that mean and what comes next? Because all we hear about is the negative side of what's going on in the markets. But in my outlook, things are about to turn the corner. Now, the main issue I have with some of that negativity is that it's not exactly showing you the whole picture. For example, recently the OECD report came out, the Organization for Economic Cooperation and Development, and it told us that inflation is mostly war-related, that the oil and gas and commodities prices are really being impacted by the Russia-Ukraine war. Why then do we need to raise interest rates for the price of money on everything? Buying a house, buying a car, any kind of business loan, which is creating higher prices and more expenses in areas that don't impact oil and gas. So of course we've seen gas prices go up a lot at the pump, but if most of the inflation is really due to energy costs because of the war, raising interest rates across the board is not the solution to that problem. Mortgage rates are now at 6.28% for a 30-year mortgage. The Fed, by raising rates so quickly, is essentially causing a recession in the mortgage industry as buyers are walking away from purchasing homes and refis are almost non-existent. Things have just gotten so much more expensive so quickly, well, people have sticker shock or financing shock or whatever you want to call it. But the financing charges have gone up so much, the cost of money is so much more expensive that they are actually not doing the deals. That's causing wealth destruction, which is one way to slow the economy, but not a healthy way. What we really need to do is address the energy issues, the oil prices, the gas prices. These are the things we really need to be addressing, and that would bring down the cost of transportation, of our food to the store, and shipping, and a lot of things that are cycling through the whole entire economy and raising the prices in general on a lot of different goods. And that can be directly traced back to oil and gas prices. So what is going on with Russia and Ukraine? Well, when we look at what is happening there, Russia recently said they're pulling back from Ukraine and that this may be a critical stage. One option, according to CNN, is that Russia could reduce its war aims, announce that it has achieved victory, and attempt to engineer to close the fighting. Now, they said that was probably a long shot, and I agree, but it's possible. Should we count on it? No. We need to address the oil and gas issues head on, whether or not the situation with Russia and Ukraine continues. But I did think it was very interesting that CNN pointed that out as a possibility, albeit maybe wishful thinking. Now, what we do have happening are Evergrande investments coming out of all ETFs. And this was from an article on Solactive.com that said, Suspension Removal, China Evergrande Group, 16th June 2022. And it said, due to the ongoing suspension of trading of China Evergrande Group, the following treatment will be applied to the following indices. And it says the China Evergrande Group will be removed from the index at a price of 0. This is all effective on Thursday, tomorrow, and it's coming out of the Goldman Sachs Active Beta Emerging Markets Equity Indexes, the RACWI Global NTR Indexes, the RAFI Multi-Factor Emerging Market Indexes. There's about 35 of those. The Solactive emerging markets ETFs. There's about a dozen of those. So lots of different investments that Evergrande Group's paper is just going to be priced at zero. That means losses are going to occur in all of these ETFs. That's kind of a delayed reaction because we actually saw the default happen last year in the fourth quarter. But it's only now that they're getting around to valuing this paper and removing it from different investments. Of course, that's not a good thing, and because it's valued at zero, that means that all of those are going to have their prices adjusted lower. Now, what's the good side of a bear market? Is there such a thing? Well, I think there is. And I'm going to share with you a study that Mark Hulbert shared that shows that when the stock market drops by 20% or more, over the 12 months following that, if you buy when the market's down 20%, 12 months later, your average total return would have been 22.7%. That's more than double the stock market's long-term average. Now, there's two cases where you weren't ahead 12 months after the 20% drop. However, it just took a little bit longer. In those two cases, you eventually came out ahead. It just took longer than a year. So I think buying when there's a 20% decline is like buying stocks on sale. And as long as you're buying quality companies with good sales, good earnings, good cash flow, little debt, it can turn out to be a good buy in my opinion, which is why I've been doing some bottom fishing. But let me caution you. Trying to buy at the exact bottom doesn't work. Everybody likes to buy at the exact low, but few can do it. Not even professionals who have been in the industry for decades can do that. That's because we often don't know the exact low except in hindsight. So I think it's best to dollar cost average in and buy while stocks are down. The fact that they're down some much more than 20%, especially in the tech area, means you're getting them a lot cheaper than you were just a few months ago. And as I've said before, a lot of technology has gone back to valuations we haven't seen since 2003. When we look in the crypto markets, we see the same kinds of things, where quality cryptocurrencies that we think have strong technology, have the blessing of the ISO 20022 protocols that is messaging that can speak to each other, are part of the new financial system. I wrote a whole book about that. And that's why I love those companies that do have that technology for messaging already built in. Companies like Ripple's XRP, Algorand, Stellar Lumens XLM, IOTA, and Zinfin XDC. Their prices are all dramatically lower this year, and the great thing is you don't need to spend thousands of dollars to invest in one of these cryptocurrencies. They're all selling below $1. And because we're so early, we don't even have crypto regulations yet. This is the time to be in early and pick up quality cryptocurrencies, the ones that are going to last and survive and be part of the new financial system. They've already been picked out and have been tested for years behind the scenes, some of them as far back as 2017. So rather than get stressed out about the market being down, I like to look at it as everything's on sale and you could really pick up some good bargains. If you only have a little cash, maybe you want to pick up some less expensive cryptocurrencies. That way you don't have to spend $2,000 for one share of stock. Even $10 or $20 or a couple $100 can get you a lot of cryptocurrency that could be worth significant money in the future. So yes, the S&P 500 officially reached bear market status, and the Nasdaq's down 30%. But I think these tech companies are going to be the leaders that take us out of this downtrend. And we're about to get some unexpected good news that's going to turn these markets sharply higher. I still am getting that in my forecast. I'm seeing that we're very close to the end of this volatility, and things are about to turn and give us a very strong rebound. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available so you never miss one of them. And check out my latest book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. It's now available in paperback, Kindle, or audiobook, and I'll leave a link in the show notes. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.